Hello everyone. Hi Sekar. Hi Lokesh.
Hi.
Hi Manoj.
Hello everyone.
Hello.
Hello everyone.
So I think first session was good, and there was around 3,800 people were attended in the first session. And let's see the second session also. Though people are registered 6,800, so first session there was last past 3,800 something. So it's I think live. So Vikram, you can start.
Sure. So first of all, I would like to, I think people can self-introduce themselves very quickly. That will be the first agenda. And I will start with Manoj. So Manoj, why don't you self-introduce and we'll start after that one by one.
Thank you. Thank you for this opportunity to share the knowledge and learn more about what's happening currently. And my name is Manoj Sureka. I'm from Synergy Consulting. Currently, I'm in the managing director for private equity advisory division. And before joining Synergy, I was head of corporate banking for RAG Bank. Before that, I worked with Mashreq Bank and National Bank of Fujairah. And by profession, I'm a chartered accountant. And I'm from Delhi. I'm staying in Dubai for about 6 years now. That's a brief.
Thank you. Shekhar ji.
Hello, hi. This is Shekhar Bhandari here. I am the president at the Kotak Mahindra Bank Limited. Been with the bank right from day one, 24 years at the bank, basically a chartered accountant, cost accountant, and a company secretary, and strongly believe in transforming the way we do business. I've been instrumental in running a couple of such businesses, and very happy to be over here and sharing my thoughts. Over to Vikram.
Thank you. Mr. Lokesh.
Hello, this is Lokesh Chaturvedi, and thank you, Dheeraj, for inviting me for this session. I'm currently managing director of Mizo Global Services. It's a recently set up global in-house company sponsored by Mizo Group. It's Mizo Bank Limited based in Japan. Before that, I have been in several foreign banks and some Indian banks as well. And trade finance is one of the key aspects of my job. So very much interested, in this. And I have also managed IT functions in banks. Before this, I was Chief Operating Officer and MD in Société Générale Bank, the French. So I've handled trade finance as part of my portfolio as well as IT. So very much interested on the topic. Thank you very much.
Thank you. Dr. Bhaskar.
Hi, Bhaskar Dasgupta. I work for Abu Dhabi Global Market in the market development function, and I look after all the new initiatives that the financial regulator is coming up with. And digital banking is definitely one of our good sectors, and anything to do with fintech. Background has been in banking, work for the British government, corporate banking, investment banking, as well as trading. So yeah, looking forward to this panel.
Thank you, Dr. Bhaskar. Over to you, Mr. Birja.
Hi, I'm Birja Jaina. Basically, I'm a chartered accountant. I have been on the other side of the bank and the regulators all through my career. But for last 10, 12 years, we have floated and promoted a company which is partly into trade finance. It's a private fund. Our main activities are into wealth and investments. And on the investment side, a major part of our investment is into trade finance and a settlement of dues across a couple of countries. So being a finance accounting professional and having a very close insight into banking. So I think trade finance is one of the very exciting areas for us, and we look forward very seriously to augment our own capabilities into this field. And thank you so much.
Thanks. Nice to have you all today on this panel. I will introduce myself. I'm Vikram Pandya, Director of FinTech from SVJN. I am also FinTech Ambassador for Maharashtra Government. And I have been in the banking industry for more than a decade and now into investment industry with Verenium Fund, where it is a FinTech focused fund. So that is from my side. I'm going to start with Mr. Manoj first. So we are talking about today innovation, correct? So my question to you, Manoj, is that when you look at innovation specifically in trade finance space with multiple different stakeholders that we have, so how do you look at the innovation in this space, specifically in BFSI space with trade finance domain?
Yeah, rightly said, Vikram, like you said, there has been a lot going on in terms of innovation in the banking and financial sector, especially in the trade finance. And the key area of innovation, what we see is currently in the AI and machine learnings, augmented reality, blockchain, robotic process automation, API platform, hybrid cloud, and instant payment. So it's not that a bank, a specific bank is going only on one area of development. They have to have a combination of this, but then there is a reality and there are practical challenges too. And we see that the massive growth that the last decade we have seen in the amount of structured and unstructured data available with the banks are humongous. And combined with the growth of cloud computing and machine learning technologies has created a perfect storm for the AI in the banking. And business needs and the capability of AI implementations have grown hand in hand, and the banks are looking at AI as a differentiator to their competitor. Because now banks, they don't have competition only from the domestic market, but from the international market and from the fintech platform also. And AI allows the bank to use the large data that they capture to make much better decision and much informed decision. And that they can use apart from trade finance in all their back office operation, customer experience, marketing, and give a combined better experience to the customer. And with this, bank can see that they can be more customer focused and they can retain them with the high retention benefits and tailor-made solution to the specific customer based on their trade. And in this, they need to partner more with their stakeholder, which include importer, exporter, and even shipping industries and regulators.
Sure. So coming to you, Mr. Sekhar, now because you have been in this banking sector as well, and then when you look at from the ecosystem perspective, the innovation means different thing to different people, right? And sometimes it is like running quarter to quarter and then just chasing that goal. Innovation sometimes looks like, okay, good to chase, but it is just a dream that some people chase. But what is your experience as a practitioner about how innovation you look at? And what do you think innovation means to you?
I generally call it that innovations are centered on providing secured, open, contactless, and a digital financial ecosystem. Whether it is banks or fintechs, I think they need to prioritize their investments to capitalize on the benefits of the new technologies and deliver the desired solutions to customers. And I generally call it 3x3 matrix for adoption stage, whatever we call. It is relative to business impacts, costs, and efforts involved. So if I were to just list down a couple of innovation areas, it will be API and open banking as one. I think the relative adoption stage is advanced and the business impact is very, very high. The cost to effort to implement, I think it will be considered as medium. Robotics, automation, and big data becomes the next two, where again, the adoption stage is very, very high, with an effect on business being medium and high. IoT, AI, ML, artificial intelligence, machine learning, Internet of Things, you do realize that with data becoming the new oil, those three becomes very, very critical. So even though artificial intelligence and machine learning is in early stage adoption stages, I call it started in 1950, I think whatever name you call, but it is evolving with the amount of data which comes in. And blockchain and cloud being the other two areas which complete my list of the entire innovation. The two early stages in this are AI, ML, and blockchain. And
contact karuchi other phone kare sorry ale
and host, can you, Mr. Bircha, I think you can mute yourself. Mr. Birja, can you mute yourself? I think, sorry. Yeah, I think there was
No,
some.
sorry for that, Mr. Birja. I think that's what the part happens when you are on a virtual platform, and when
you don't realize sometimes that. Yeah, I agree. So let's continue. Sorry. So you were.
I think I was on IoT, AI, ML. I think a few parts of that. I think artificial intelligence and machine learning are at early stages, blockchain at early stages. But if I were to see a few impacts which can come, generally you'll find a combination of IoT, AI, ML, and blockchain will make a significantly high impact as you move forward. When it comes to various banking arenas and etc., I think we'll be working on the API side, open banking, RPAs or robotics, automation. Data remains as a big oil, and we still feel that we can do much more. My personal estimate has been that you can do probably 10 times more than what you do it currently. There has been a use of AI to some extent, and we are the part of, I call the IBIC, which is the entire blockchain infrastructure company, which gets got promoted by all the banks put together to have an early stage big development out of India.
So since you have mentioned this, now just let me add this small question to you. So what do you think on the scale of ecosystem? What do you think that whether independent fintech doing certain things is going to matter the most, or do you think people coming together and working together will matter the most?
I have been a strong advocate of collaboration across, be it, I define the periods now as BC, which is called before COVID, then is called as DC, which is called as during COVID, and then is AC, which is after COVID. Probably DC taught you that you have to be a lot more collaborative. There are a few partners who have a good amount of capital and a business understanding, and there are a few partners who are agile, who have the CX, who are innovative, who want to do many things together, but they may require capital to help them. They may require a good amount of stability to be with them. They may also require a good amount of security, and collaboration becomes the theme in order to move forward on each of these areas. And blockchain, the biggest technology, generally means it is collaboration as a base, otherwise you won't be able to move forward.
True. So coming to you, Dr. Bhaskar Dasgupta. So when you look at regulation space in this, right? Innovation and regulation, sometimes people think that as kind of an enemy chasing each other, right? But here, it is required that you work with regulator, you create innovative solution by keeping yourself in that black and white boundary rather than some of the gray boundaries to make sure the investor is happy, even the regulator is happy. So where do you think this regulation can help? And I'm sure sandboxes we will speak about later, but you can also touch upon that a bit and tell us that how do you think innovation and regulation goes hand in hand?
That's a good question. And again, from a regulatory perspective, we have a rather interesting perspective because our first and foremost guidance is that we need to keep the clients safe, client money safe. So that is the, how would I say, the overriding principle that we use. But if you look at it from our own perspective, we are a startup as well. We are just over 5 years old. And we learned quite a lot. I know people from a banking perspective, this perspective is all about, and we talked about technology, but if I look at it from a regulator's perspective, whenever people come to us and propose various types of banking businesses, whether we're talking about a trade finance bank or lending, or investment banking or advisory or asset management, we tend to start from the basics. At the end of the day, a digital bank is still a bank. So just because you're talking about blockchain or you're talking about cryptos doesn't change the fact that you are going to be taking in deposits and you will be extending credit, hopefully, if that is the plan. So I would say from a regulator's perspective, 90-95% of our conversations and views are the boring old things which have started to happen from 6,000 years back. So from an innovation perspective, we generally tend to look at it from the perspective that, yes, innovation is good, but the basics remain the same. You still have to have controls. You still have to have experienced people. You still need to have KYC, AML, so on and so forth. The final thing that I'm going to say about the innovation piece is when you are looking at new business models, and believe you me, we have seen some really, really interesting ones. Quite a lot of them have already gone live. For example, we host the world's first pure digital trade finance bank, and there are many more who are in the application phase and should get approved shortly. There are some very interesting pieces that are coming out, and we welcome those kind of interesting business cases. Our regulations are designed so that we can handle these new business models as long as the core of banking remains the same.
True, agreed. So when we look at whatever we have discussed so far, and if I were to summarize, so we need to look at technology in line with whatever the main purpose of the solution is, so which is the business side, and regulation, right? So this is the triad which we are talking about, where technology, business, and regulation comes together and creates a proper solution. And coming to you, Mr. Lokesh, now, when we talk about technology, right, it is always good if technology is invisible for the end user, correct? Because at the end of the day, end users should be indifferent. But at the same point in time, technology is trying to improve the way of doing things, the way that customer is trying to consume that product, or the way we are able to distribute it, either cost-wise, efficiency-wise. So when it comes to innovation and use of technology for all this purpose, what are your views on that?
Yeah, certainly. I think very nice question, but a little complicated. See, we are in the service industry, and the key objective of this industry is customer service. So most of the innovation which is happening is around making customer delight. So why are we doing innovation? So the core of innovation is customer. If we can improve that, customer experience, then we can retain the client. And that's a very essential aspect of doing business today. If you see the marketplace and if you see the competition, there is hardly any room for negotiation on the margins. More or less, every bank is offering the same base rate or the same MCLR or the same kind of pricing for different products. So what now differentiates a bank from the other is customer service. The kind of IT platform you have, the kind of efficiency you provide, how you can make that customer feel better, your service than the other. So that's very essential. Now banks are forced to do this kind of innovation to provide more and more efficient service to the client, and it is not an option now. The second part of what I would like to say is if I actually analyze the P&L of a bank, now it is a significant part of the expenditure banks are incurring is on IT. The other side, if you see, earlier there were a lot of people working in operations department. Now there is a shift of talent from operations to IT. So if you see, some of the large banks have set up such large IT setups, and many of them are in India because IT is considered to be a very good IT talent hub. So now if we see really the transfer of talent, it is happening from operations to IT because a lot of things are getting automated, and we actually need to do more with less. And if we have to achieve it, we can only do it through automation. So I also draw, some inputs from my previous speakers, and there are a lot of innovations which are happening. Manoj spoke about artificial intelligence. Shekhar also gave a very good summary of various kinds of things which are being explored by banks, and that is the fact actually. At the same time, when we try out something, there's always the risk of going wrong. And that's where the risk management, internal control, and regulation comes into place. But it is an evolving world. So, regulation always follows the practice, or regulation always follows the the innovation. What we can see, what happened to cryptocurrencies in India is exactly an example of that. Now, I'll just summarize the answer. At the end of the day, IT is not producing anything which is not required by business. So basically, IT is working for business and business is working for client. So ultimately, the requirement flows from client to the business side of bank, and then from business side of bank, it flows to the back office. From back office, it flows to the IT. Now, the efficiency on the bank is to understand this requirement very clearly and translate this into reality. And how efficient a bank can be in understanding the client requirement, converting into back office requirement, and then the analyst has to convert this into IT requirement. And IT has to perform its own quality check and deliver what the customer ultimately wants. That is the whole, information technology cycle in the bank. Maybe if
since you just mentioned this part, I want to now touch upon this very shortly. So far, people have looked at technology as a cost center. But due to this emerging technologies and fintech, people are now looking at technology as a profit center, because sometimes innovation comes from the tech side and you know that, okay, this is something which is happening in the market, and to remain in the business, to keep yourself ahead of the competitor, sometimes tech says to business that, look, this is what you can do more efficiently and effectively. And that's how suddenly you are talking about automating certain internal processes, increasing efficiency, reducing cost, or increasing revenue by introducing new product. And that is where sometimes you can look at even tech side becoming profit center. So what are your views on this side?
Yeah, once again, a very interesting question with, a two-side approach. So on one end, you can say, profit center. But in the current marketplace, profit center has some limitations on the upside. Whereas the other way of increasing profitability, I think now the core, the way banks are looking at their balance sheet and P&L is not really looking at absolute amount of profit, but looking at the profitability per amount of capital which they are using. So if banks have to be profitable, just only profit is not enough. If they have to be profitable, they have to look at both the sides of P&L and not just one. So they have to look at the cost to income ratio as well. So people, if they can reduce, if they can increase their efficiency of operation, and if they can reduce their cost of operation, it automatically contributes to the profit. And IT is one way of significantly reducing the cost of operation. But IT also is a large cost in itself. So what banks are now doing is putting continuous review and modernization of IT platforms. There is a continuous effort to review the IT systems, upgrade the hardware, because the old hardware was pretty costly. If you just see how much it cost us to set up a server or IT infrastructure 10 years ago and what we can set up now, you see the capacity and the cost per unit of data. It's very, very cheap now. So we cannot even support that legacy system and infrastructure. It is better to keep updating and upgrading the IT infrastructure to be efficient in future. And, in IT infrastructure and banks can be very, very complicated. So if we cannot modernize it from time to time, we have to decommission certain things and commission certain new things. So it's a continuous challenge. And of course, it is a mandatory thing to keep the cost under control, which ultimately results into profitability.
I completely agree. So today, when you talk about affordability, accessibility of the technology, that has changed a lot. And because of that, people are able to now look at the innovative models also without thinking about infra cost. And that is the agility which we have spoken about. Now, when we come to the next part, I will go to Mr. Birja. So a quick question from my side to you will be, when you look at from your perspective, right, as a practitioner who is there in the industry, and looking at how the technology has changed the way people are even looking at from the auditing perspective or accounting perspective, or even just making sure that you are still keeping in touch with the technology itself, right? So in your sense, the innovation brings its own challenges, but it also brings its own advantages. So how will you define this journey?
Yeah, this is something really interesting.
Sir, your voice is slightly lower. Can you come closer?
Yeah, am I you better now?
Yes, much better. Yeah.
Because I'm on the full.
Now it is better. Now it is better.
See, it's very interesting situation now in banking as well as the overall financing world. The customers, have no more patience to wait for things to come. This is what is I understand is the bottom line. The customer doesn't have the patience to wait that so and so bank is going to innovate and I'm going to get the service. See, and the price of the banks, the banking service companies and facilitators, digital banks or payment systems is also making the customer demand more and more, which obviously gets sink into the bank's IT or management to continuously work on innovations like Mr. Chaturvedi said, it is not a phase or stage-wise tranche anymore. If you're talking about innovations and if you're talking about from the customer perspective, because I think I relate that much more than from the bank side, what Mr. Chaturvedi was saying. The customer wants that, he doesn't know what the bank is doing on the behind. He doesn't really care to know, what kind of systems the bank has, because he has got the entire plethora of information before him, what's happening in America, what's happening in Australia, what's happening in UAE or what's happening in India, and he wants the best. Before, like we used to have a lot of restraints, if you're talking about our home country, India, or even if we're talking about my foster country, say UAE, we used to have a lot of limitations in the banking. Today, people talk about, criticizing institutions, which was, I never heard it before. So these are the things which have come because we have got that hunger to get things at ease. The customer is demanding efficiency. The customer is demanding hassle-free banking. And to deliver this efficiency and hassle-free banking is the challenge that the innovation is facing. The innovation is not leading, in my opinion, innovation is just trying to meet up or trying to catch up with the customer expectations. Like the payment systems, or if we talk about digital banks, because we are also working, I think I'll also speak to Mr. Dasgupta separately. We are also working on a huge digital banking platform across continents, so across multiple regulators, and we are facing, all the regulators and trying to meet them. From the digital perspective, today, the cost, if we are talking about the cost of investment for innovation, that is, of course, very different because I probably would not be able to comment on that because we really don't know. Like Mr. Chaturvedi said, the IT department. You cannot quantify how much the IT department is saving for the bank. Had it not been there, how much the bank would have incurred to get into this level of service. So sometimes it is difficult to justify, but then I think we have to accept technology and innovation as a part of ongoing cost without making it really a cost center, because it is not really a cost center because it flows into the entire length and breadth of the institution. So this is on one aspect, but I will be trying to come to the disruption or the tiering up part of it. Today, like earlier, trade, if I'm talking about a trade customer, earlier I used to go to my bank, ask for the LC, wait for 10 days, go at their convenience, get my LC, send it to the beneficiary, then wait for things to be manufactured, to be shipped and to be received and then to be paid. So whole cycle. Other than the shipping, manufacturing, it used to be loaded with another about 25 to 30 days. That is what is our experience. But today we wouldn't want to wait for 25, 30 days. There has to be innovation into, if you're talking about trade as a major vertical of the banking, and which of course translates into revenue, logistics, translates into convenience and the business commerce as such. The commerce demands that all the fab that can be cut must be cut. Only those operational restrictions or the operational parameters which are time bound or which are logistic bound, which are hardware bound, probably the customers are going to accept. So in my analysis or in my opinion, today innovation has become a kind of thing which is taken for granted. Like you go to a bank, you really don't expect things to be delayed. You open your bank account, you make a payment, you do remittance. Even with this today, in spite of all this much of innovation, digitization, we have regulatory issues. What Mr. Dasgupta said, a bank after all has to be a bank first. So you can't, like you have all the digitization, you have all the innovations, but you cannot remit funds. You have the necessary documentations, which is not gone online, which is not available to the enforcing authorities, in this case, the compliance department, from your whatever ecosystem you have your data. So still we are heavily manual oriented in terms of meeting compliances, in terms of meeting the requirements of the law. The next disruption must come into this innovation, be it artificial intelligence, or be it like big data, which holds a lot of hope to analyze, extract data, or to make data available with full secured ecosystem. Like today, we have got invoices, we have got payment obligations. So we must be in a situation tap and pay. You know, that is going to be the next demand from the customers, that you take care of your internal issues through blockchain, through AI, through robotics, through big data, through IoT. But then at the end of the day, I want my service, I want my payment to be done, or my payment to come, and I want my commerce to run. So keeping commerce interest in front, not the bank or institutions interest. If we keep the business and commerce interest in the past, then everything becomes very simple to understand.
Sure.
So this is what is my opinion, sir.
Sure, definitely, I agree. So when you look at the summary part, so today you require service, not institution as such. So banks are not required, banking is required. So the banking is coming today from likes of Amazons and Facebooks, as we know.
Absolutely.
And that is what is happening in all the other industries. So entire value chain you are able to decouple. And because of that decoupling, you are able to now create value across that entire value chain, which otherwise is not unlocking, right? So that is one good summary that I can put together. Now coming back to Mr. Manoj, very quickly, if I were to check with you, that look, some of the innovations which we have seen, right? It has changed the way industry was working earlier. And also from the perspective of investment and cross-border payment, for example, when you look at technologies are changing. So my question to you, Manoj, will be that when it comes to innovation and investment in technology plus innovation and let's say service like, let's say cross-border payment, right? So suddenly you are talking about new opportunities, the way people can collaborate, cross-border payment can work together. How do you think all this innovation and investment together works well?
Yeah, so on that, become like even Shekhar said, that a lot of banks have already started feeling that the fintechs are not their competitors, but they are partners where they can collaborate, and both can be at a win-win situation. Now, if you see, the market talks about that what will happen to the traditional banks and all, but what I personally feel that traditional bank is going to stay for a long. They will continue, because the thing is, fintech is focusing and can focus on one particular area, whereas a traditional bank has to offer a wide solution to the customer. And given that, we already see a lot of fintechs are actually taking a collaboration and partnership approach with the banks. Like even Dr. Bhaskar was saying, some of now digital banks are starting, only digital banks, and they are collaborating. Recently, a new digital bank, YAP, announced that they collaborated with WAC Bank in terms of IBAN sponsorship. And similarly, you see a lot of trade finance specific companies are opening up, and what they're doing is they are funding specific to a trade finance solution. And for that, again, they are collaborating with the local traditional bank. So what you see is that there's a lot of potential in terms of investment in the specific sector in the fintech, and those fintech can jointly work with the traditional bank. And like Lokesh was saying, any solution which traditional bank wants to offer, they have to also see the cost involved to that. They can also do 10 different solutions which fintechs are offering, but do you want to incur those costs at the bank level? Do you want to actually deploy so many people at the bank level? So bank has to actually take a call whether they want to do that investment, whether you talk about money or manpower in-house, or you want to take a help of the outside fintech firms, or you want to do a hybrid model.
True. So it is not only like coexist, and then you are competing only. It is like coming together and then making sure that you are developing solutions together. Sometimes, specifically in India, when you look at fintechs, will need to work with banks together because there is no separate license that you can get easily on tap. But even if you look at from the perspective of global scenario, earlier it used to be always that you can either coexist or you can co-extinct. But today people have realized that sometimes some things are better with banks and some things are better with fintech. So they have identified and they have understood their roles and responsibility very well. I see this also happening in future very well. So coming back to you, Shekhar. So when we talk about, let's say Swift GPI, or when we talk about Ripple, making this cross-border payment available at much better way, and you can see the way people have even automated the entire trade finance procedures and processes because of the way you can do e-documentation. So all those things coming together, that digital transformation journey that we have seen, what do you think the impact will be? So do you think that that impetus is required and it was there and that's the reason it happened? Or do you think that there is a lot to be done? You are on mute. Shekhar, you are on mute.
So let me take you through an experience over last 10 months. And that's a very important part, what has happened. I've seen trade finance for around 25 years, have read about it, the experience of 100 years. And I think a few other processes as well. I'll just give you a few statistics. It will just generally help us to put the context. Yeah. If I were to look at the way, do we call ourselves a digital bank? I think there's a scope over there. Do we call a few others as a traditional banks? Possible, but let us look at the number of RDs we open. 97% of the total RDs we have, which is recurring deposits, it happens through digital channels. It means a salesman doesn't interact with the person. It is the person who comes on the app and does it. 84% of fixed deposits, I think, are booked through digital channels. So we have mobile banking with 180 features and net banking with 250 odd features, which generally facilitate this part. If quarter on quarter we were to say home loans, I think we think, is it only deposits? No, I think home loans, you have a Digi Home journey, and there is a 200% quarter on quarter growth in terms of home loans which are sourced digitally. There's a 400% growth in terms of personal loans sold digitally. Earlier, these numbers used to be 10 and 20, but here you generally see a significant shift happening both by us as a bank, by customer, and where does it come from? It comes from the new environment and the new area which comes in. Credit cards were sourced digitally. I think that comes in. Trade finance part. If earlier customers did not move, in spite of our lot many requests to move digital, there were solutions which were there, but they were reluctant. They said, I think, were they fearful that the people in the office won't have enough jobs? Were they fearful that it won't be secured? And if they don't sign physically, there will be some effect. You do realize that I think a lot of them transformed. A lot many customers I know personally, for 7 years when I was requesting, they did not. They transformed within 7 days through the pandemic. Digital signatures, digital submissions, everything paperless. I think it came in, and we saw probably 1,500 odd customers transforming for us. All the loan documentation, I think everything became digital. And I'm saying these are real use cases rather than only speaking in theory. And when you talk of Ripple, I think we work with Ripple, and I think we've been able to see a good amount of cross-border. It's a tie-up which works, which ensures that I think the cross-border happens seamless. What is the objective? If earlier we were taking on an average 24 to 48 hours to give information to the customer, I guess I think it happens at 1/5 to 1/10 of the time now. Submission of documents, you have similarly. And is it only for us, or it is, or no? I think I'll say it is industry across. I always quote, I think JP Morgan's coin. I think they created coin to analyze the processes and the documents. I think it enabled what 12,000 or the credit agreements in several seconds. It used to take what they estimate 3 lakh plus man hours earlier. I think it is now able to do it in seconds, and so it is safe, it is secured, with speed and the time, I think, which is able to make it happen. So important for us as a big part is that providing the new and digital services requires a strong mindset. It requires mindset with the core application, and then equipped with the new technologies which I spoke somewhere of big data, artificial intelligence, and ML. And banks are also aiming to provide that an integrated trade, cash, loan, liquidity platform, because it is only they can provide it. A few partners can come in, they can give you individual cash platform, individual liquidity platforms, some small solution which is possible. But to have it entire thing integrated along with credit, I guess it is the big balance sheets which are required. And if we are able to have the front end and the back end I think talk to each other seamlessly and provide a service, it won't be difficult. So now it happens in every segment, B2C, B2B, it happens in cross-border, it happens with a seamless supply chain financing platform where I think both the banks and fintechs, I think, especially work on.
Correct. Surely, so you have summarized it well. So if I were to just look at what has happened because of the technology like API and AI, ML, big data, blockchain, is that suddenly we were able to seamlessly create an environment where everything is now stitching together. So rather than earlier the approach was product oriented approach, then it became solution based. But now we are talking about life cycle management approach. So customer life cycle management, how can we do that better is what we are focusing on. And this is where I think when fintech comes into picture and some of the other technology solution will come into picture, one technology may not be able to solve everything, but when it comes together, I think that is where you are able to unlock the magic. So coming to you, Dr. Bhaskar Dasgupta, couple of questions, right? So when you look at on the data side, so data privacy, security, we have seen recently also so many things that are happening in news that this data was not safe, data breach, leaks. And as a regulator, when it comes to cybersecurity, data lifecycle management, data privacy, how do you look at this area? Because innovation will happen. Sometimes startups will focus on that business side of it, but they will not be focusing much on the security side or the management of the data that you need to go through. So where do you think there is a balance that you need to maintain, and how do you think regulator can bring that?
So look, I mean, I'll be bluntly honest. We are perhaps the first regulator in the wider region who has pretty much as possible echoed what GDPR did. And if you look at our application forms, there are specific sections for controls on customer data, etc., etc. Not just that, but we actually have a different treatment for people, and it's a risk-based approach. So if you are a financial applicant who is going to be holding client money, we treat them differently, assuming that they actually have got a higher degree of risk. So let's put it in this way. You have to start from somewhere. Some people might start from the place that, anything goes. We tend to start, as I said before, customer protection is paramount for us. So as somebody very pithily said, we have to keep an eye out on the cat as well as on the fish. Now, as a Bengali, I can say that. For me, protection of the customers is very important, but we do encourage other firms to come in. Now, let me give you an example. We are one of the extremely few regulators who have completely approved electronic transactions. So if you wanted to do any kind of negotiable instruments of credit without paper documents or wet signatures, you can. And we are starting to work with ITFA to encourage our banks, our corporates, and our fintech firms to use that. Now, if you look at, people were talking about trade finance. It's a very low margin job. So it's my job to make sure that we have the regulatory environment which allows people to move away completely from paper or wet signatures into a pure digital basis, innovate new business structures on top, while keeping personal data and personal funds safe and secure. So that's where we are coming from.
Correct. Completely agree. So basically, the moment you look at from the regulator side, it becomes very critical for them to ensure that security should be by design, and it should not be the afterthought that there is a patchwork. And that is where I think you are doing a very good job. And another question just to add to that, when you look at on the other side of the table, when you look at sandboxes that you have created, so what kind of innovation do you think sandboxes are suitable for? And how do you think the innovation and sandbox can create new avenues, opportunities for people? So can you touch upon that?
Sure. So look, I mean, as I said, we are a startup as well. So we start from the premise that our regulatory rule book is pretty progressive and innovative to start with. So let me give you an example. We are perhaps the biggest regulatory jurisdiction when it comes to digital assets and digital issuances. It's a regulated place where you can set up an exchange. We have already approved 5 of them, brokers and custodians. Our RegTech is literally space age times. So from the perspective of having the rule book, we think ourselves as already being fully advanced. But we also set up the Reg Lab, which is our sandbox, knowing that we don't know everything. So that allows us to actually tell fintechs, come in, sit down and set up your innovative business models under our guidance, and then let's test it out. And we have been so successful that we are the second most active fintech jurisdiction in the world when it comes to these sandboxes. And once you have gone through, you graduate into becoming a full-fledged financial institutions, and the lessons learned, we incorporate that within our rule book. The other thing that we have done is that we are releasing something that we are calling as a digital lab, and the demo is going to happen on the 5th, that's next week. We actually completely understand the issue that was mentioned before, the difference between a financial institution and the fintech. And we are ambivalent. I mean, every bank is a fintech and every fintech is a bank. Because at the end of the day, if you're doing any financial transactions, you are a bank. And every bank is using technology. So I don't think this argument for us really holds that much weight. But what we do need to do is to bring these two parties together. So what we have done is to create a digital lab, which does 2 major things. One is it brings in the banks and the other financial institutions who want to test out these new business models that the fintechs are proposing. And the fintechs have a chance to actually build up their models and propose to the banks, all under the watchful eyes of the regulator. So what we have tried to do is to literally disrupt the traditionally sequential way of new product or innovation happening. Instead of that, a fintech comes up with a new model. They use standardized APIs that we have proposed. They do it on our platform. Banks can actually look at it. And if there's anything that is unique, you just lean over and ask us as the regulator, is this okay? So we have just moved the entire new product or innovation process away from being a sequential basis to a parallel basis. So our estimation is the regulator is helping you to fail fast, to test out, to roll out new products and innovative business models, at least half, if not less times faster.
Sure. Great. So when we come to the next part of this, so coming to you, Mr. Lokesh, when we talk about security, we just spoke about security and how it plays major role. And the data lifecycle itself is very critical from both perspectives, from whether it is a customer side or whether it is from the bank's perspective. So now this new regulations which are coming up, whether it is going to be your account aggregator model, where you are not actually sharing the data directly, but it is coming through the financial services provider or information provider. And then there are users who are consuming it, for example. So all this new set of digital consent mechanism and the data which is based on your consent, how long you can save, store it, process it. How do you think that will change the way banks used to approach? Or do you think that there is no change as such, but it is just going to augment it much easier for bank to work with? Because now you are going to be either consumer as well as you are going to be, let's say, provider, both for these services.
Yeah, certainly. So actually, what is happening nowadays is that banking has become quite a global business, at least on the corporate and global banking side. And data is traveling around the globe, even if the transaction is happening in a certain geography or jurisdiction. Data may get captured somewhere, may travel somewhere else, get processed somewhere else, and may be used by somebody else. Now, in this scenario where data is being regulated locally, but it is being processed, accessed, used in different jurisdictions, there is definitely a cross-jurisdictional scenario which is being faced by banks and technology companies as of now. So there are projects which are run by banks, and I have run those kind of projects for certain banks where, let's say, if it is data related to European countries where GDPR is applicable, but that data is being processed by some IT companies or global in-house companies set up in India or different jurisdictions, how is that data being controlled? So there are processes in place, there are controls in place, there are regulations in place, what can be accessed and how the data is supposed to be handled. Normally, data is classified into three categories. So one, this I'm talking of, the personal data and mainly coming from the GDPR.
Correct.
So data is classified into customer data. Data is classified into the staff related data, because staff also provides a lot of personal information to the bank, and that's also supposed to be managed well. And then there's a vendor related data. So the banks also deal with a lot of vendors, and their personal data also comes to the bank. So there are different processes put in place by banks to manage data, in different jurisdictions, related to different jurisdictions. These are some complex projects which are managed. I can also say that, in different jurisdictions, there are different laws and regulations to protect the data, and different kind of regulations to obtain consent. In certain jurisdictions, you have to seek a written, formal, proactive consent. In certain jurisdictions, you need not obtain consent. In certain jurisdictions, you need to intimate to the client that data will be used by some external party or vendor or service provider or IT company for processing purpose or something. In most jurisdictions, I would say regulators expect that the data which is captured in the normal course of business by bank is not sold for some commercial gain or is not used for cross-marketing kind of purpose. So that is a general expected restriction. Otherwise, in most jurisdictions now, it is possible to store data or the use data
Consent-based storage.
with controls. Of course with prescribed controls.
Definitely, thank you. So now coming to you, Biraja, when you look at two different side of it, right? So you are creating yourself a global trade finance platform, and so when you benchmark yourself with different innovative platforms that are available, so let's say Reboot is one such platform which we are having here, and then there are so many other platforms which are going to be having some sort of solutions, services. So if you benchmark, which are the platforms and solutions which you believe are not worthy? Because that is one of the questions on the panel that we have received. So I'm just asking that directly to you, because you are, I think, the right most people even on the panel and for this purpose.
Can you just repeat it again, the last question?
Sure. So my question to you is that if you were to benchmark trade finance platforms or trade related to trade value chain platform, right? How do you then benchmark, and where do you see different platforms evolving? Can you just top of your mind say certain platforms that you believe are there and people can look at that?
So far as our trade finance side of the activities are concerned, we are actually using quite a few platforms, because today none of the platforms, they are all evolving now. So none of them have matured to a level that they have a sufficient number of banks and institutions on their platform.
Right.
Like suppose I'll give a very live example, probably will relate well. We have a very small country with 2 million population in Western Africa. It has 7-8 banks, and each of the bank has different Nostro accounts. Now, one of the client of that bank is dealing with another country where there is no breach. And they were into a particular trade platform, and it took considerable time to realize that they cannot build the bridge, so they have to go onto the traditional platform. So the whole idea of these platforms are basically what I was trying to tell in my earlier answer, that across the banks, there has to be kind of a unanimity to have a dialogue with each other, to have a communication with each other. Like suppose we will talk about say trade reboot or trade assist, or there is a company called trade asset we're using somewhere or other, because of only our conveniences that certain banks, XY banks are in that platform, and my instrument or my trade receivable payable settlement can be done quickly through that platform. So even if I'm on to say trade reboot, I would go to say trade assist because that particular bank or that particular country, this is more. So this is one aspect which a little before I was saying that the cross-border settlement is again yet to evolve, because I fully agree and I appreciate what Mr. Dasgupta was saying regarding the regulatory part of the banks, the protection, the client's money, the client's security. So keeping that in mind, there has to be some innovation coming now. I think the whole industry is awaiting a very much bigger disruption into trade finance than into banking. Banking had reached to a stage that people, I think as a customer, I'm pretty comfortable. I can do whatever I want to do with my bank without much hassles, and it probably meets 100% of my expectations. But in trade finance, which is the bulk, maybe the margins are pretty less, like it was spoken before, but the volume is enormous, and it depends that sometimes small countries, we need certain transactions with a country like small like Cambodia. So the country's economy depends on certain trade. Like there was a ground-out trade from a particular country in Africa, the whole GDP is linked to that ground-out trade. So that is where I have an opinion that the process of trade finance and coupling it with banking and making it a cross-border is yet a challenge. And I think, as my elite friends are saying, the technology has to work really hard now to meet these challenges of the banking. Because one aspect of banking which we are talking about is technology, we are talking about is data. That is perfectly fine as far as the bank is concerned. But as a customer, you have individual customers, you have corporate customers, you have trade customers, you have various kind of customers. So if you're talking about trade, or if you're talking about trading platforms, I think the banks have to understand the trading platforms, subject to, of course, either sandboxing or to regulatory approvals. So once this, suppose trade reboot is a part of ADGM, so it gives you automatic comfort. But not all the trading platforms are really under certain regulations. There are vanilla, somebody is registered in Cayman, somebody is in BBI. They are also doing a sizable volume of business, and we had to also associate with them. So comparing with these platforms, I think, I would very appreciate Mr. Dasgupta's work. I have been also closely watching, though I personally don't know him, about ADGM and people going to ADGM. I have got my experience from Mr. Khandelwal about ADGM. So I think the regulators and the sandboxing is very essential now to accelerate the trade side of the banking, which is really probably the demand for the hour now. Thank you.
Noted. So I will come to Mr. Lokesh immediately. So just to summarize it, I'm sure that what we need to do, as you rightly said, that we need to have interoperable ecosystem, because there will be so many platforms which will be there, they will thrive, and we need to also ensure that there is interoperable interface. And that's where I think regulator will come into picture, trying to standardize certain things. You will have some consortium coming up, which will again try to make it more standardized. And I think that is the future. So yes, Mr. Lokesh, you want to add something?
Yeah, I would just like to extend a little bit very quickly on what Mr. Jaina said. Trade finance is definitely one of the most important aspects of banking, and requires a significant amount of innovation. When we say innovation, and we need to create an ecosystem, there is not just one or two parties involved. It's various stakeholders. There are various stakeholders that need to be involved, and everybody must buy that innovation. Everybody must trust that innovation, and only it can become successful. Now, what we see is, people are afraid of change, and that holds them back. And everybody is saying somebody has to go first, and everybody is in the mode of waiting and watching. So just like, I was really impressed when Mr. Dasgupta said that they have set up this kind of laboratory, and they are encouraging, fintech companies to try their platform, which is very good to hear from a regulator. Now, in, let's say, in different jurisdictions, without naming them, I have been trying personally with regulators, with auto regulatory bodies, and with different stakeholders to try some kind of innovation in trade finance, but it has taken me at least 3 years, and I have not seen the light of the day. Discussions are still going on, and as recent as 2 weeks ago, I sent through one of the industry association, one representation to some of the regulators to set up some kind of a working group and involve various stakeholders in the process and see, what we can do, and bring some kind of acceptability and bring some environment of trust around this ecosystem. It could be, some regulatory bodies, some self-regulatory bodies, some industry associations, some IT companies, some consultants, some big four, some banks, some clients. Let's make some kind of, environment where we can talk and we can bring everybody together. Because if just one company is doing some innovation, ultimately, if the other, stakeholders are not involved, they don't trust it, it's not going to work. It's not going to be successful. So, that's what we need to do, and it's a long way.
Definitely agree. And that is where I think, sure. So very quickly, just to summarize, we require industry academia partnership for creating right set of skill set. We require also regulator, industry, as well as technology coming together and making sure that the solutions are created. I think we are already out of time. But I would like to thank you everyone for being here today. And I hope that our audience has also gained some intelligence from this discussion. So thank you everyone for being here today. And over to you, host.
Thank you so much.
Thank you.
Thank you. And India is a great example in terms of whatever I think is being done on government, people, regulatory bodies.
That is itself a good discussion topic, frankly. Great.
Thank you.
Thank you, everyone.
Thanks. Bye, everyone.
Thank you. Bye-bye.